everyone. I get the very enviable job of following Brock, which is pretty much impossible, but I'll do my best. First, I'd like to say that I had never been to Kyiv before this, and it is fantastic. I called my wife after about the first 12 hours of being here and said, we have to come back here for our next vacation, because this city is amazing. And the more time I spend talking to entrepreneurs, like I got to this weekend, the more excited I am about the potential that Kyiv has. So thank you, everyone, for the warm welcome that the city has shown all of us. It's been fantastic. So I'm here today as both an investor and as somebody who's looking for money, because I run one of the largest incubators in the United States, a company called Science that I co-founded with my partners about 6 years ago. To this point, we have had one enormously successful exit with a company called Dollar Shave Club, which was acquired for $1 billion cash by Unilever last year. So one of the things we always get asked is, how do I do that, right? How do I take my idea and end up selling my company for a lot of money? So I'm going to walk you through some of the ways that we think about this and that we help companies grow. So a little bit more on Science. We've created almost $2 billion in equity value at this point from our portfolio. We've invested in over 85 companies in 5.5 years. And we've raised almost $400 million in follow-on investments for our companies, which is more than anything a vote of confidence in what we're doing. And it allows our companies to continue to grow. 5 of those businesses have been acquired. I mentioned Dollar Shave Club earlier. We've also sold businesses to Google and to the New York Times, among others. And most importantly for me, we returned all of our investors' money in under 4 years. So there are very few funds that can say they've given their investors all of their cash back that quickly, and the investors still have the ability to ride up the portfolio. I've been fortunate in that I've had great team members that I got to do this with. So my partner Mike, who I first met in 1998, among other things, sold companies to AOL, was a former CEO of MySpace during the very difficult wind down and sale days, and we've been working together since about 2000. My other partner Peter and I got the chance to work together in the first place on Science. There are many of you in this room that probably know Peter. His job is essentially to be the most well-networked person between LA and Silicon Valley so that he can help us raise money. And he is directly responsible for raising almost all of that $400 million in follow-on funding. And my other partner, Tom Dare, has taken 3 companies public, and his expertise has been invaluable. So when we look at a company, and we try to figure out a fast and efficient way to help them scale, and everything we do is data-driven, right? We ultimately want to find out where the points of failure are and where the points of improvement can be, and those are often the same thing. So we will look at a company from the idea stage, through the design stage, through media testing, and get data at every point. You redesign and retest, and then ultimately make a data-driven decision about whether you want to proceed or not. And for the entrepreneurs in the room, I would encourage you to put this into practice at every stage of your business. Whether it's design, whether it's media buying, it doesn't matter. If you're making data-driven decisions, you'll make better decisions. And each of these, for us, are also the chance to be, this may be a place where we kill a concept or kill a business, which we will do ruthlessly early on, because it's easier to make small mistakes than it is to get millions of dollars in when you're playing with other people's money and realize you've suddenly made big mistakes. So when I talk about data-driven decisions, I mean really in-depth, every portion of your business. If you're going to run a business, you have to understand what's driving it. And if you don't, you're not really running the business, it's running you. So we've also developed a process for a repeatable innovation process to create companies that we generate internally. So we'll partner with entrepreneurs like we did with Michael Dubin from Dollar Shave Club, who came to us with a concept and a palette of razors and said, I want to completely change the way men interact with the razor buying experience. And he had this dream and he had a vision for essentially owning the bathroom, which, not necessarily the sexiest vision of all time when somebody comes to you and says, I want to own the bathroom, but it was very much aligned with and very well expressed his goal. So we partnered with him It's one way we can grow businesses. The other way is that we can grow them internally. So we'll identify an industry and we'll get deep into analytics and analysis of what exits look like, what the value of the companies is, what multiples are they trading at, what are the legal and regulatory risks, before we even decide whether or not this is an area we want to pursue. We'll ultimately figure out what the cost to launch is and then try to make a decision. Okay, now we found something we like, we found a model we like, we found entrepreneurs we can partner with, but do we have a team that is backable? Can we get financing for this company? And are there ultimately going to be customers for the company? Once we've done that, we decide how we're going to scale, what it's going to take from a technology standpoint, and then very quickly move into that testing and design iteration process that I mentioned earlier. So what this looked like for Dollar Shave Club was, as I mentioned, getting approached by a very, very talented entrepreneur who had a palette of razors and a dream and wanted to turn that into a real company. So we initially looked at e-commerce as a sector. We looked at a bunch of different revenue models and came up with this recurring revenue subscription model as, at the time, the preferred sales method that we preferred for the sector. We hired strategic team members as needed, and then we ultimately end up evaluating a whole bunch of companies. We met Gilman through our network. We negotiated an equity basis in his company, and then we paired his team with our team so we could grow. And I mean, he was in our office growing his business for more than a year, and ultimately started scaling when he got to about 25 people. He ended up moving out, and then the magic happened from there. But Science maintained a very active role on the board and in the strategy and operations for a very long time until the company was actually acquired. So another company that we have is Mammoth Media. This is probably the next company that's on the way to becoming, hopefully, the next unicorn. So Mammoth now has is one of the only companies in the world that has 3 of the top 100 apps in the US. And we got to 100,000 paid subscribers in just over a month with one of these apps, and it was on $1 million revenue run rate within 6 days of starting. So, and again, this is a company that is deep, deep in its data. So again, figure out what is driving your business so that you can make the small decisions that need to be made on a moment-by-moment basis. So this is a company that literally is looking at the hourly lifetime value of every customer they're acquiring so that they can make more accurate forecasts and adjust their user acquisition bids as necessary in real time. So this is, ultimately what we're talking about is finding a business, or for entrepreneurs that want to grow their business. Every business, regardless of the sector, has to figure out a few things, right? You have to have the team in place that can execute against your vision. You have to be able to do the development work to make something concrete out of your dream. You have to be able to somehow make money to support the business, and ultimately you have to find an audience that's going to use your product so that you can really scale it. And this is the same regardless of whether you're selling razors or you're building the next great blockchain company. Now for us, what we are doing is we are creating now our 4th vehicle, which is a dedicated blockchain-only incubator that will be funded only through an ICO. We wanted to fund this through the community rather than through our network of traditional LPs and venture. So instead we created the single most difficult project I've ever undertaken in my life, which was trying to figure out how to structure this correctly. And fortunately, we could rely on Brock and Mike and a few others who have gone before us to help guide us through that initial structuring issue. So very much like Brock, there's the warning. You've all seen it. Yeah. So we've put together a great panel of advisors to help us with this. Some of them are listed up there. Some of them are not yet on the slide. But one of the things I want to talk about this morning in my limited remaining time is the token structure. Because what we've done is we've created a token structure that's completely unique and allows all of the investors in our Science blockchain to get tokens directly in the portfolio company. So if you think about our investors in the Science blockchain as the LPs in our fund, This gives the LPs direct ownership of the portfolio company and allows them to make individual decisions whether to hold or to sell those assets. So this means that every time a portfolio company has an ICO event, 70% of whatever tokens the incubator holds automatically go out to the holders of the science token via the smart contract. So you can think about this, about the science token as a portfolio token by itself. You buy one science token for $1, you may get dozens, if not hundreds, if not thousands of additional tokens in the future. Because what we do with the other 30% is we reinvest it in order to refresh the fund. So we've created an evergreen vehicle that can be a perpetual potential source of future direct free tokens for the holders of the science token. Now, because we hold both equity and tokens in each of our portfolio companies, when we have an event where a company gets acquired, say there's another Dollar Shave Club or Hello Society or something that generates tens of millions of dollars in proceeds for science, we take those proceeds and we use 70% of them to repurchase our own science token on the open market. So the market will set the price. So if we have $50 million that we generated in proceeds from a sale, the market will set the price for how much those tokens cost when we go to rebuy our own tokens in the open market, which will reduce the supply. We can all imagine what that impact may be on price, and it will mean that there are many fewer token holders participating in the future distribution of our portfolio company tokens. So there are fewer and fewer science tokens available that are participating in this potentially limitless supply of future tokens. The remaining 30% goes to the owners of the incubator. That would be myself and my partners. And ultimately, we've been doing this for a long time now. We first got involved in the blockchain space 4 years ago. You know, our neighbors in Blockchain Beach, we're fortunate to have Brock and a number of others that helped us navigate some of those waters early. The market wasn't quite mature enough back at that point, so since we were allocators of other people's money, when we couldn't get some of those early exchanges and mining operations banked, we ended up having to pull the plug. Now that the market has moved on and matured, we're at a point where we're jumping back in, and in order to best understand this, we started making the first investments we could in ICOs. So we've started buying and selling tokens so we could understand how the market worked. And we've developed this sort of robust investing and trading arm at this point. So what are we looking at? What are the things we're most interested in doing is we want to build real businesses, right? We've all seen that you can make a ton of money in the ICO market right now, but many of those businesses aren't likely to survive for the long term because they don't have the team, the data, all of the rest of the things I was talking about earlier. We're going to use our experience in building businesses to build real businesses on the blockchain, and we're looking to partner with the best entrepreneurs in the world. This means probably many of you in this room are the people that we want to talk to. We want to find the best development talent, we want to find the best concepts, and we want to help them execute. We're already incubating a dozen or so concepts, including some of those that are services or infrastructure that are needed to make the ICO market more, as it matures, to give it the tools that more mature asset classes have. And we're very interested in protocol layer development. We're believers in that fat protocol theory. So our private sale started a week ago. It is, because of US regulations, fairly limited. $250,000 minimum for US residents, $50,000 minimum rest of the world. There are no discounts, no bounties, and no bonuses because we are structured as a security. There is a public sale starting in about 2 weeks, and there are no minimums at all unless you're investing in US dollars. You can find all the information, sign up for the private or the public sale here. Yes, I would encourage you. This is the slide that you want to take a picture of, so you can find it later. I appreciate your time this morning, and thank you very much.